Hi everyone, and welcome back to the channel and welcome back to another video. What a day in the cryptocurrency market as we see altcoins absolutely begin their surge and their catch up to Bitcoin on the higher time frame. But today's video is going to be all about Algorand, as we are now seeing Algorand gain a lot of traction. What I want to do is just analyze this coin on the lower, medium and higher time frame, so we can be getting some real key levels and reactionary levels that we can be expecting some major dumps and pumps from for Algorand. I do think we're approaching a major key zone here for Algorand, so I'm going to be going to some depth with Algorand and possibly with the total market caps and the total two market caps to see if they can be giving us the clue as to when we can be expecting the pullbacks from altcoins and where them pullbacks might go to and where we can potentially be benefiting from some lower time frame dumps and pumps to the upside. So if you like the video, guys, give it a like. Any comments, of course, always appreciated, and subscriptions. Let's get straight into the analysis. So I will start out by saying I think we've got a lot higher to go for Algorand. However, on the lower time frame, to be FOMOing in here on these big bullish candles with longs, I think it's not a great decision in my opinion, which is why I'm going to go through a bit of the lower time frame analysis first. And one thing you will see right now for Algorand is you've got 1, 2, 3 breaker candles here. This is a bearish breaker candle, 2 bearish breaker candles and a bullish breaker candle here. So one thing I want to point out is, as always, we're always looking for the bearish breaker candle fill, as we are now approaching for Algorand right here. And you will also notice that on the 3 daily time frame, another thing that we've got is this cluster of what was a bit of demand before the breakdown is now what is seen as resistance. So I'm going to change that into a different color just so we can identify some different zones within the zones, and you can see now we really are approaching these zones, and that's why we're seeing the candles get much bigger as we approach these liquidity zones, because quite a lot of people will be eyeing up these order blocks and these clusters of consolidation for a bit of a short. And we know, as market participants and market analysts, that's when the candles get bigger and bigger and bigger, because we can then expect the shorts to start piling in at this level, above this level. The market makers give them a bit of a success, and then at that point a bit of a pullback, and then smash straight through all of them early longs entering the market on the big bullish candles and then creating another big bullish candle. And maybe at that point people start to get a little bit of FOMO again. So on the 3 daily time frame, one thing that we can be monitoring here is this trend line that we've got, week to week trend line, that kind of gives us a bit of a higher target for Algorand. That can factor in some of the potential manipulation that we get here with a lot of people might want to enter a long or a short. The market makers take them all out, maybe a bit of an expanding flat, running flat. We don't know yet. The market makers can do exactly or anything they like. But this trend line here, cutting through these candles, candle wicks, and look at where it cuts through here, right? This bit of cluster of consolidation here, that 3 daily resistance level. Potentially we get that drive up, and then we come back down to that key 3 daily support demand area. And this could really wreck a lot of people, because you will see a lot of people at this point calling for a break of horizontal resistance. While we've broken the high, then what do the market makers do? We know the market makers love to play games, love to take liquidity, and it would, in my opinion, make the most sense to get a bit of a pullback from that 25-26 cents zone right down to that 17-18 cents zone. And if we just take a look at the percentages of that, that's a major 20-30% correction on the lower time frame, which is not unheard of in altcoins in an uptrend. We see 30, 40, 50%, even sometimes 60% corrections to the downside before the next wave's up. And when we start to look at Algorand and potentially start looking at this as an impulse and a 5-wave move, this could very easily just be our 5-wave move, or even the 3rd wave, and we get another drive higher. And the way we can factor in some more manipulation is just use a different trend line to the upside. So let's just take a look to the left. We'll use a similar point, however, this time we'll cut it through the candle bodies, and this potentially then gives us our higher targets to that 5th wave up and around 30-32 cents. So just reiterating the point here for Algorand, I do think we've got higher to go. But as people start entering the market on big bullish candles, they open themselves to a lot of manipulation. Anything can go on here with the market makers, taking longs out, taking shorts out, continuing in the third wave. People FOMO the top of the third wave, outlining on this trend line. It pulls back and everyone's calling for the bear market again, and then the market makers take them out once again and head to that 31, 32 cent zone. So I do think we're in the middle of a third wave here, so it's not really a time to be doing anything, in my opinion. The time really to be entering Algorand was in this long Wyckoff accumulation period. Now entering the market on the big bullish candles, you open yourself up to a lot of dangers, especially if you're working it out on the lower time frame, entering leverage trades. Right now, in my opinion, and I say it a lot, and it's the saying of the channel, we just sit back, relax, and let the market do the work, and we look for these moves to play out, and then we look for them higher time frame pullbacks, which inevitably will be manipulating zones in and around this area. A lot of people then would say that, oh no, we've got a head and shoulder, oh no, we're crashing down. But then as soon as we come back into this demand zone right here for Algorand, that's potentially when you look for the next leg up to much higher levels, which is what we are going to discuss today. We are going to discuss the higher levels because this is lower time frame stuff. I just wanted to get that out of the way first, because as we see the big bullish candles come into play now, that gives us our particular zones as to where we can potentially be seeing the market pull back to in the future. So let's just take it to the weekly time frame here and see if we can get any confluence with the targets that we've got right now for Algorand. And one thing I want to point out is this area of consolidation for Algorand right before that key move to the upside, that really led into that parabolic rise. And even if we extend this bit of analysis here to the left, you can see this is one of the fundamentally key zones for Algorand. It's been resistance, support, it's been manipulated in the past. As always, market manipulations around this area. In my opinion, it's proving to be quite a key level of significance. So again, on the higher time frame, we're just going to take a trend line from low to high, and you can see we're potentially starting to enter that zone now where if a pullback's going to happen on the lower time frame, it's going to be in and around these areas. Whether we get that little shoot up higher or not, it gives us a bit of an air to the caution to the wind here for Algorand. We don't want to be FOMOing in as we approach this key area of resistance, but on the higher time frame, really taking another key trend line to the upside, it sort of gives us our next major target to the upside into that key area of consolidation that we've had really dating back to 2019 all the way through to 2022. Will it come into inception again? Probably, I do believe so. But in and around these areas, that's where you can potentially see how we're in a wave 3, wave 4, wave 5. And that wave 5 comes in and tops up and around this trend line. We get that pullback. And then on the higher time frame, then we're potentially looking at a big inverse head and shoulders, which gives us a 1-2 to the upside here. I'll just draw that out for you. A potential 1-2 for Algorand, with a much bigger third wave to come. So right now we're sort of analysing this on the medium time frame, on the weekly time frame, just to see what we can be getting on the lower time frame. A potential inverse head and shoulders here setting up. So realistically, if you are going to be entering longs in and around this area, the market's probably going to come back to this zone, because even if we just look to the left here, that wick of liquidity is probably going to come into place. So if we was to get that pullback, in my opinion, we're ideally going to get some form of a wave. One, topping up and around this area, coming back to a key level of significance around that 16 cents region, where we are now, where we've got the big bullish candle breaker. And then that gives us our major higher time frame targets for a 5 waves to the upside, which aligns up and around that with 99 cents and $1.14, $1.15 region. So let's just draw a zone out here for Algorand and look to the left and see if we can find any key levels of significance that we've had in the past for Algorand. So let's take a look at this. Not much really, but when we start to see these parabolic moves, you could argue that these areas of consolidation before the breakouts. But yeah, really not much. That's why these trend-based Fibonacci's and Fibonacci analysis gives us a bit of an advantage, because there's not really much to the left here that we can use to our advantage. So using the Fibonacci's, using the trend-based Fibonacci's gives us a bit of an advantage. So another thing I want to do is just point out, where was the capitulation level really for Algorand, where it began the major moves down. I would argue this top up here is when the major move to the downside began. So taking it all the way to the bottom, take a look at that. You know, you've got your 100% retracement there, aligning that 3.618 retrace up and around 99 cents. And then that also gives us the higher time frame targets. Potentially, if Algorand was going to go and set a new high, we could be looking up and around that $3 and $4 region. It's up to everyone's personal opinion whether Algorand does. I personally don't think Algorand's going to be setting up for a new all-time high. Just the price action, the way it had 5 waves up and it's broken the low, it seems a little bit more corrective to me. So it almost seems as if to me that we're going to potentially let's just draw a trend-based Fibonacci from low to high, all the way to the low. Didn't quite work out there. Low to high, all the way to the low there. See if them levels align. Yeah, you've got the 1.272 and the 1.414 aligning again at that $3 and $4 region. So I do think if Algorand's going to set a new all-time high, that $3 and $4 region is going to be the key level of significance that we're looking for. However, I do not personally believe Algorand's setting up for a new all-time high. I think the medium time frame here on the weekly time frame that we're doing within this range is giving us the major clues as to what we can be expecting on the lower and medium time frame. So let's just take another trend line from low, wick to wick there, and we can see if we get any confluence for a bit of a timeline or something for Algorand to give us a clue as to where, if we do start moving up really rapidly, we've got a bit of an area to be looking out for. So them key trend lines to the upside really do kind of align with them 3.618 and the 4.414 regions, especially if we was to get that 5 waves to the upside, pull back, go for a third wave, and really start rocketing like that. We're seeing altcoins really start to catch up to Bitcoin now. So I think for Algorand, my key area and key level of significance is going to be that 4.272 region up and around $1.14. And you know, you could get a psychological hit of 99 cents and just miss out on the $1 region that if we get up here, everyone will be targeting. So you need to keep an eye out for that, which is why having a zone, something like that, having a zone is just a lot better than having a specific price target, because if price enters that zone, you know you can start scaling out, which is where you then look to take percentages at key levels, because from the lows we're kind of sort of already looking like a 300% move if we get to that key area, and then from the lows, and you know, we're talking thousands of percent to the upside from the lows if you get to that 3.618. So having a strategy on the way up to potentially take out a bit of a percentage here, a bit of a percentage here, and more of a percentage here, leaving some to remain for all-time highs if we get it. That's how you're going to benefit from this market, and that's what I post in the Patreon. So just a quick word on the Patreon, it is just CryptoRyan17, the same as I am on Twitter and YouTube. We do requests, educational content, altcoins, Bitcoin, stocks, my chart settings if you like the way I set up my charts. People can just message me and sort of analyse different markets and different market sentiment. I go into different tips and tricks that I use throughout the market to monitor sentiment and how I do things and why I do things. Entries and exit strategies and why I do things the way I do them. So if you want to find out a little bit as to what I'm doing and how I do things in the market, you can go to my Patreon. It's $10 a month, so it works out to the price of something like $2.50 a week, which, you know, if you're buying a coffee from Costa, Starbucks, it's cheaper than that, cheaper than a coffee a week. So if you do want to support the channel in any way, that's the way you can do it. But yeah, guys, it's not financial advice. As always, just sit back, relax, let the market do the work. And I'll see you next time. Cheers, guys.